So why exactly is the market selling off so much today? What's going on, team? It's Ricky with TechBot Solutions, and here to quickly break it down. So I decided to buy into the dip on TQQQ today. And again, just because I buy it does not mean that you should. Markets are still somewhat bearish, but it's because of why that they're selling off that I'm not too concerned. I do want to share with you that I did not go all in when I buy into the dip. I do it with a very light position size. This gives me the opportunity to get in at a low cost, but if it does continue to sell off, I don't have to worry too much because, again, by being only 10% invested in a trade, I can tolerate those pullbacks a little bit easier. With that being said, I want to go ahead and share with you guys why it is that the market pulled back so much today. So what we ended up seeing was that there was data that was released this morning. It showed that the U.S. labor market has somewhat slowed down. You might be scratching your head and be like, okay, well, why is that such a big deal? Unemployment is still incredibly low. Job growth might not be growing at what it was, but the fear right now that people have is that the Federal Reserve might have waited too long to start cutting interest rates. There is supposedly a very high probability, according to what Jerome Powell said and what the market is expecting, that as soon as September, the Federal Reserve can start cutting interest rates. And for those that are unaware, when the Federal Reserve begins to cut interest rates that make it more affordable for people like you and I and businesses to borrow money. If it's more affordable for us to borrow money, we're more likely to spend it. And if we spend money, it boosts and grows our entire economy. This is what we've been factoring in for all of 2024. It was expected since the start of 2024 that the Federal Reserve could possibly start cutting interest rates, but it's not until September that seems like it's finally going to happen. But now the market was at all-time highs. Now the market is not liking the sentiment that maybe the Federal Reserve took way too long for them to start cutting interest rates. I really don't think it's that deep. I think that markets got ahead of themselves, as they always do, right? Markets became too overbought within a short period of time, and I think that this is a perfect example. If you look at this on the 4-hour time frame, markets were going higher for longer for no given reason. And if we look at this, I mean, it was only a matter of time for a pullback like this to finally happen. Even with Amazon is down 10.6%. It has nearly wiped $200 billion off of its market cap. And guess what? Its earnings was not bad. Year over year, Amazon is showing signs of an amazing growth. Just again, there's such a big focus for the overall economy in AI and the development that Wall Street wanted them to grow at, and we're just not there. I see this to be a great time, and again, this is just my opinion, a great time for you to really pick maybe 1 or 2 stocks, add them to your watch list of what companies you would like to go long on. It's not that you have to actually buy them right now because markets can go lower for longer, but I was thinking of making a video maybe this weekend where I can talk about 5 to 10 different blue chip stocks, meaning high quality companies that have shown long-term growth and that are a little bit more on the oversold side now. So therefore, they present good dip buy opportunities if the market begins to recover. And again, I can't make this any more clear. I'm not saying that you need to buy the dip or that the market has to recover. All I'm saying is that it's maybe not the worst idea to create a plan of action for 1 or 2 different, big blue chip stocks that offer good return that you can begin to pay attention to and formulate a trade plan with. I think it's better to have a plan in advance rather than get surprised during a moment's notice and make an impulsive trade. And that's exactly what we're setting up for right now. I mean, I love the opportunities that are presenting themselves, and day by day, if the market continues to sell off, we could continue to short it. But there is no question that eventually the market will find its support and then begin to recover. And I just want to make sure that you have your 1 or 2 stocks that you intend to go long in so you can actually make money as the markets begin to recover. With that being said, again, the main reason that the market is selling off today is simply because of just lower than expected unemployment. So it says a report showing hiring by U.S. employers slowed last month by much more than economists expected. That sent fears through the market. Again, why is this sending fears through the market? Unemployment is still at a historic low. Jerome Powell has said it so many times before. I just think that, again, this market is so overhyped up. Things get factored in advance, which is why you shouldn't make an impulsive decision. Just like markets are aggressively selling off today, then markets could potentially begin to quickly recover. one doesn't mean that you should aggressively go short or aggressively go long. It means that you should create a plan of action that makes sense for you. And as of right now, I think it's very simple to see. Looking at the NASDAQ market on the 4-hour time frame, we are oversold. This is an incredibly bullish stock that now has recently pulled on back. Is this a time where we want to buy to begin to load up, or as it gets closer to the moving average? As long as this pattern continues to trade above the moving average, then it's still bullish. And again, it's not that you have to buy right now, it's just creating a plan of action so when that opportunity does present itself, we can appropriately take action. And again, that's exactly what we're going to be prepping for if you're part of my LPP team. But other than that, I don't want to take too much of your guys' time. I just wanted to make you guys aware of that job report. A slowdown in job creation, it's not that big of a deal. Markets overreacted on the way up, and now they're overreacting on the way down. And again, I've said it so many times before, any overreaction is prone to a correction and overreaction on the downside. So really excited to follow up. I hope to see you for Monday's live trading session. And if you're ready to join, it's going to be the second link in the description down below. You can get 50% off. It's a one-time payment, lifetime access. And I want to remind you, prices will be doubling in September. So if you get in now, you get grandfathered in, and it's a one-time payment, lifetime access. So whenever it is that you're ready, second link in the description down below, and I'll see you on Monday at Market Open for our live session. We'll see you then.